All right. Let me know if that works. Anybody else on? All right, all right. You can hear me clicking? How do you hear me clicking? I'll just wait for everybody else. All right. Got anybody on? I can't see. All right, y'all. You can see the chat. Outstanding. Outstanding. Guys, it's just one of the charts that I stream live when we trade. Um, I'm only doing it now because we're not really worried about levels and it's ETH. But this is just a band chart. 1 minute NQ on the left, 5 minute NQ on the top right, and a 5 minute ES on the bottom right. These are harmonic zones. Let me see if I can go to this one. Let me Let me do YouTube public. I'll put up one of each.
Wait, do you have a pin on your card?
Hold on one second, guys. Sorry about that. My wife needed me. So here, let me do this. We're going to go 5 minute ES on the right and 5 minute NQ on the left. We have, for newer members or members that aren't ITG members, I guess YouTube folks, I'm just waiting a few more minutes till we get everybody in. But we run weekly weekly buy and demand, buy trigger, sell trigger, weekly supply, weekly demand. We've got a 99.97% chance that we're going to tap one of those two. You look over here on NQ and NQ gap down below it. So 431.66. We literally got about a 95% chance of hitting that this week. So I'll talk more through that later. Anyways, and then the red lines, just because you guys are watching the stream, the red lines are harmonic zones. Down here in the left corner, short rotation, the harmonic zone is 74 points for NQ. We went 115 on the opening drop. I guess the opening drop's the high. So 74 and 74 puts us at 150. 150 off. We went down 175 points. Let me see where 150 is. That's 2 harmonic rotations. And you can see, just understanding harmonic rotations, supportive, right? You got a 5 minute candle close, 5 minute candle open. We don't have any closes underneath. 2 full harmonic rotations. Again, these PWG levels, these harmonic rotations, they're tied to weekly buy sell trigger. So you'll see that if we're below weekly sell trigger, all the harmonic zones are red, maroon. If we're above weekly buy trigger, all the harmonic zones are green. And the little gray lines in between is the midpoint between the harmonic zones. And this just how NQ and ES typically work. You can see here on ES on the 5 minute, it failed to get below the harmonic mid. It's going to rotate back up into the zone. There's no mid here. There's a way for us to put a midline in here. I don't have it on our PWG script. So yeah, welcome all. Guys, feel free to ask questions. For Discord folks, I'm going to be in the workshop chat. Yeah, we've missed, I think we've gapped hold on, let me get Discord in my room. We've gapped 4 times above or below the weekly supply demand box and have not closed it. 4 times since 2000. Hello. That is a very, very infinitesimally small percent. So I don't know if we got anybody, but again, with the levels, the white lines, that's our weekly supply demand box. Above it, you're playing long. Underneath it, you're playing short. We gap down to it. Again, we've had a gap. The last 3 weeks, we've had a gap. We had our one on Tuesday while I was on vacation. We called the top. We had another 2 weeks ago. We had another last week. But even though we've gapped, we're still touching. We're still trading inside the box or touching the box. Again, longs paid. But you had to close them out. They actually would have fell short. And I'll talk through that a little bit later. Shorts paid. Longs paid. Neither really. We finished in the box. It's rare that we finish in the box. Less than a 5% chance. So we typically take long calls or call debit spreads when we break the box. And puts or put debit spreads when we break the box below it. When we break below the box or break out above the box. While we're waiting, I'll see if I can find the one where we never gap filled back into it on SPX. Oh, it's right here this week, March. And these are the PWG levels, guys. I've posted these every week since, back in when I was, helping out with the Options Millionaire Discord. There's a track record, long time. I've been doing the PVI trades for many, many, many years. Here was an interesting one in February where we gapped down and we never traded inside the box on SPX. And then we had this one where we gapped open, closed red. The next day we came down to it and we did not quite get into the box. So that was another day, another week that you're kind of wanting. That's why I tell everybody we have guidelines for PVI. I know newer members that join kind of get frustrated. They want it to be mechanical, and it really, really tough to have a mechanical system. We are not fixed delta. We do not sell iron condors. We have a call credit spread that will be, and I'll go through it in a little bit. We'll have a call credit spread that will be around the upper PVI level and a put credit spread that will be at the lower PVI level. And these two are very independent of each other. This last week, we were able to sell puts. We were able to cover them. We were able to sell puts again and cover them. Some people got in calls, and then we got a lot of money for calls. We covered our puts, and then bam, if we didn't drop on Thursday and then gap down Friday, and we sold, and we didn't even account for probably 60% of the profits on PVI last week in the model portfolio, but it's what it is. So when you go back and you look through the process, sorry, I clicked the mouse a whole lot, but when you look through it, right now, starting 2024, we've had one intra-week breach, which was right here. Dolphin, you can't hear me? We've had one intra-week breach here, and then we had another one that I believe was here when Iran launched, or actually Israel launched the missiles back towards Iran, and ES breached overnight. That was on a Thursday night. It was one of these weeks, but that's it. I counted it as a breach week, even though we didn't. All right, I don't know how many guys we got. I can't see. I don't know if anybody can let me know. It's crazy. I can't see anything on my dashboard. So what we're going to do is we're going to go through SPX and the roadmap for the week. We're going to start off from last week. I talk fast. I talk a lot. I probably have done 14, 15 hours of homework since Friday's close, and I'm ready for this week. Oh, okay, we got plenty. All right. So let's get started. PVI, guys, and I'm gonna do entry level. It literally, it's an acronym, Pure Value Index. It's an acronym we came up with way back in a day. It dealt with how I ran my options hedge fund. So again, PVI is just a number. We calculate it every weekend. high and low, and that's where we're going to trade to and from. So I'm going to go through this week's PVI levels with our game plan, and we're going to talk through about how to structure it, how to play it. Let me take off drawings. The only thing you see here, 50-day moving average, 100-day moving average, 200-day moving average. Our gravity points, that's a proprietary thing that we have in ITG. It's something I've used for portfolio management, where to sell calls, when to cover my calls, vice versa. And again, this just gets me an idea. As we talked through last week, we were looking for the market to come back down to gravity point A, and we went. So it's just where it is. I got to bring the drawings back on. I'm going to take off the fib, because the fib really, I mean, it matters, but it doesn't matter right now. Let me pull off the gravity points. So this is what we got this week. And you can automatically see I can't do that. 1 second. I just want y'all to be able to see the weekly supply demand box. They matter. They always matter. And we've gapped down through them. The concern now is PVI is below this opening, this gap. I am a big believer in SPX. You need to be aware of where gaps are. We'll go through that process. I'm not going to teach a lot on this stream. I'm going to kill it, and then we're going to reopen a stream back up, and I'm going to work through chart construction on NVIDIA, and we're going to go through everything. Fibs, gravity point, market structure, parallel channels, trend lines, you name it. We're going to throw everything at NVIDIA, but short of the kitchen sink. Momo, and we're going to go through everything. So I don't want to teach too much, but this is the levels. I will post these in Reddit tomorrow. I'll post them on Twitter probably tomorrow afternoon, tomorrow night. But these are the levels. And when I say these are the levels, these are the levels. So again, I've already put this out in ITG. Our members have it, but 5071, 5614. We've got them for ES, SPY, NDX, NQ, QQQ. We do it on all 36. The sheet's posted. It's done. I'm going to mark it up next Friday. Win, lose, or draw. I don't care. This last week, we hit 75% win rate on the PVI spreadsheet, and that was the second worst performance we've had in the last 4 years. The worst was 60, not even 62%. So that said, here's what we got. So if you're on stream, you want to mark them, mark them. But need to be aware of what we got as far as these boxes. I'm going to copy this over. We're going to go to the same map, the same chart I had last weekend. Not a whole bunch changed on it. All I'm doing is I'm copying. I'm going to paste PVI here. I'm copying. I'm going to paste PVI here. It's manual, guys. There is no automated one script that gives us PVI from last week or this week. And so it's manually calculated. Now, we got all-time high. We still got this gap. What gap? Where'd it go? Small gap that's there. I'm going to take it off. It's in the way and not impacting us. The gravity points become very important because we need to know where the gravity points are relative to our PVI levels. With A being negative, that's an anchor on the system. We were looking for the market to fall back into this ellipse last week. And I had mentioned we've got fib structures that are still set up. They haven't changed. We go back, we've got the the gray fibs, which the halfback is at 53.10. That's the one that we were working at from the April lows. And then the aqua fib, which the 236 is at 5,300. That puppy's going all the way back to Friday, the 27th of October. And again, hit or miss a couple days. Last week I went through extensively the demand zone. We'll talk a little bit more about it with NVIDIA later, but this demand zone is still active. The reason this is gray is I work on a fib structure. I work a standard and then I work a zone. And the zone just allows me to click it quickly without changing everything up. And all I'm interested in that gray zone is the halfback, 50%, and the 618. That's it. It's just this zone. Why? We should bounce in this zone. How much higher? Don't know. We don't know any of that yet. Now, we got a gap that got filled last week. That needs to come off the deck. But because it's coming off, I'm just going to go ahead and draw the gap to where we currently are. Because we just created another gap on Friday. And then we're probably going to have another gap tomorrow morning. Unless the market does some magic while we're on stream. This gap got filled. Right? So the one I did take off earlier, I guess I got to put it back on. And again, all gaps, you know, I guess it's hard. I think a lot of times people want to get legalistic. Do all gaps get filled? No. Do the majority of them? Yes. Do they get filled immediately? No. Is there a way to identify how soon they're going to be filled? It's really, really subjective. So let's not worry so much about when we're going to fill this, if it's going to fill. It could be, hell, it could be this week. It could be next month. It could be next year. It could be in the year 2031. I don't have any idea. And again, you're not going to get paid. You're not going to make any money sitting there speculating, trying to figure out how can I know when the gap's going to get filled and take advantage of it. That's, again, guys, you can know. Just don't be the trader that knows everything about everything and can't make a fucking dollar, right? Don't be the smartest broke guy in your Discord, in your circle. If you're smart and broke, you're broke. I don't care how smart you are. I don't think anybody else does either. At the end of the day, how much money you keep, how much money you make, how much money you keep is ultimately what matters. So we had our parallel channels drawn this last week, and we clipped it Friday. And you can see Friday's high was at the bottom of the gap. Friday's high was at the bottom end of the parallel channel, down to the white line, which again, red, white, blue, 50-day simple moving average, 100-day simple moving average, 200-day simple moving average. DMA, I call them. I don't do exponentials on dailies. Again, for non-ITG members, they hear this all the time. Here's why the market's so hard. It's the freaking biblical Tower of Babel, right? Because you go on right now, and man, if we took a poll and people are day trading, people are using the 8 EMA, the 9-period simple, the 9 EMA, and the 10-period simple. 4 different indicators, all plus or minus just a few points here or there. Some idiots are front running it. Some are trading it on a tick chart. Some are trading it on a 1 minute, a 2 minute, a 3 minute, and a 5 minute. Ain't nobody speaking the same language. The stock market's got a million different dialects. And that's what makes it so difficult. Because you got to be able to see through the noise, right? You can't see the forest for the tree. You got to move. You got to maintain it. You got to always try to gain perspective. That's all this is. I didn't do any of this work this weekend. The only thing I just did it. I've not touched this chart since Friday. Now, I will tell you, looking left, you see we topped out here in March. Okay? Once we broke structure here, this became a demand zone. We broke structure here, this became a demand zone. We came back down, and then we broke structure, this structure. When you break a high, wherever we came from, after you break a new swing high, there is a demand zone that is formed. I don't draw them on the daily. I go down and I only draw them on the 4 hour. That's just me. But for textbook, for somebody upstairs, well, we kind of got it now. Somebody on Finchwit's going to say, hey, there's a supply zone up here. Well, technically we broke this swing low, so there is some supply up here. But when we were right here in April, that wasn't no supply zone. We had no break of structure. And again, if you get down, because you can go down to the 5 minute and you can always find a break of structure, a swing high. I'll talk more about that on NVIDIA. But that's how these things are drawn up. And so all we're looking at now is, have we fallen too far too fast? And does the market need to come back up and revisit the 50-day moving average, revisit last week's supply zone, go back and fill this gap, get back into the channel, revisit gravity point A? Possibly. Very possibly. However, with everything going on in the Middle East, it's unlikely tonight. Could it happen tomorrow? Yeah, it could happen at any time. We just know that this line is drawn over here, that this was a regional swing high, right? We worked lower for 2 weeks. The third week we found a bottom. So 3 weeks down, and it took us another 3 weeks to get back up. So from April 1st until the 15th of May really is when we broke it. So you're talking about 6 weeks. This was a 6-week top. If we take out this 6-week top, this demand zone 100% is going to be in play this week, and it's going to be in trouble. Now, what's crazy is the 382 is all the way from back last October. That's the aqua line. There's also a gap here. That's the little orange box. There's also our PVI here. Now look, I didn't look at this when we're bulling out PVI, but there's a lot of confluence there. Oop, I got one more chart I got to pull up, and I apologize. When you break a high, the low in which we came from creates the demand zone. The same thing. When the market's up and we come down and we take out a swing low, then there becomes a supply zone up here. I've got to get to analysis, chart, open browser, copy. For this week, for those that have not been on, I don't even know if I posted it, and I apologize. Sorry guys, it's set up so that my number 2 screen on this 9-screen system is my number 2 screen is live. So here goes the next. As we talk through, let me see if there's a way I can. As we work through here, this is 26 models as showing where the SPX high is going to be. But right now, if we look at the massive amounts of data that's here, we got 9 of the 26 models that are telling us 5450 up to about 5480. So if we get over here to our chart, 5450, I say 54 or 55? I don't even know. I got to look again. Guys, by the way, I'm from 54. I'm from the public school systems in Alabama. So if I can do this, anybody can do this. Okay, so here's where the models, there's 9 models telling us that we're going to find some resistance in here. Because this is where all the hedge funds are playing this. Now, what I try and tell everybody, and I don't do this right now for our group. I might start back. I know a lot of people have been asking me. But guys, it's real simple. You can cluster them. This right here is 2 times the expected move. This right here is 2 times the expected move. They are detached. They are by themselves. They are loner. They are the lonesome losers. We ain't going there. We're not going to 49.95. We're not. Like less than 0.12% chance of us getting out here. Because it's detached from the cluster. Now what you do notice is you got a conservative cluster and a normal cluster on the high side. To the downside, the market's coming from here, and we got a little speed bump here. We got 3 of 26. It's going to run over. And then we got a void, and then we got a void. What's crazy is we got a void here and a void here, and we got the same void in here. That tells me personally that there's a real good chance in the event that we do cross that little obstacle, that's going to be my very next target. Now, I have no idea where that is on this chart. I'll do it tonight. I'll do it tomorrow morning. I might do it Tuesday when I'm bored. I might do it if the market goes over this obstacle and I got to tell people, hey, watch that 51.65 level. It's going to be important. 51.70, 65.75. That level is going to be important. I don't know why there's a void on either side, but that's like a low volume node. And you read this like a volume profile, right? There's a high volume node, there's a low, there's a real low, and then there's just a straight void. Well, I mean, it's going to be like, it's like you're going 85 and all of a sudden you're going 85, not supposed to go 85. You got 75 mile an hour speed limit. You're driving in Texas and you got a little podunk town with one freaking stoplight and you got to all of a sudden slow down to 35 miles an hour. And then as soon as you're through the stoplight, it's back to 75 miles an hour again. That's the way volume profile works. Okay, and then we're driving here. There's no one. There's no cops. There's no cars. You're just driving free. There's no speed limit. It's the Autobahn. And then all of a sudden you get into a little town. And you get into a little town. Then you get over here. Well, this is New York City, Atlanta, Chicago, LA. A lot of traffic. That's what a high volume node is. That's what a low volume node is. And so low volume nodes, the market goes through them very fast, like shit through a goose. Okay? Fast. When you get into high volume nodes, the market starts slowing down. You start finding support and resistance. Okay? And that's where typically, that's called market structure. We start forming supply zones and demand zones. You can quote me on that one too, Sam. But so we've got a normal PVI cluster and we got a conservative cluster. Now PVI is set at 56.14. So PVI is actually going to be right here for this week. Guys, I don't usually do this. I don't usually worry about it, but it's good to go through the models to kind of see. We all need to be cognizant of 55.25. And we need to be cognizant of 51.70 on SPX. SPX. I'm a terrible drawer too. I think I failed fucking kindergarten back in the day. I might have had to repeat kindergarten. I'm terrible at drawing. I don't have an artistic bone in my body. But I do understand this. I understand there's two voids and there's two models telling us this level is going to be important. So, in the event that we go below this, or this is the high side, we go above this, I would probably short trading here, expecting the market to reverse, bounce up and come back and then cross it. And when it crosses it, cross to here. If we do hit it, I would expect the market to come back to this one and then run all the way through it. Matter of fact, it'll probably go through those two models as well. And so when I'm looking at it, I'm sitting there going, okay, 55.80, 55.30, there's a 50-point SPX move in that area. That's juicy. And that's up here. And so we look at 55.80, which is where the conservative cluster, these 6 models, 7 models if you bring that in, these 7 models are all above 55.80. Well, shoot, I go over here and I'm like, okay, 55.80, what's there? Oh, helly hell, our gravity point C is there. And the midpoint between these two channels. No wonder it's there and it's important. That's a conservative cluster. So I wouldn't hesitate to sell that. But with PVI sitting right here, I don't know how much premium's on PVI yet. At 56.14, probably not more than 60, 70 cents with the markets trailing off at the open. But this is going to be a good target. It's going to be a real good target. In the event that you can find a debit spread, here's the way you trade this model. You want to get a debit spread at the front end, and you want to sell credit spreads at the back end. Just like this, you want to trade debit spreads at the front end, and you want to trade credit spreads 50, 70 right here underneath it. The fact that PVI lines up with it, I'm good. If we go over this hump, you know we're going to go run right through to here and then bounce. If we bounce and hold it, then we're going to start to climb that mountain. That's the way the market's going to work, right? On the way down, what level is this? 51.65, 51.30. $51.65, $51.30. And that's what it's going to be. When we fall out of that demand zone, we're going to run all the way through. The market's going to run all the way through here to that cluster. And then it's going to come back. If it comes back and cannot get back above it, then it's going to start climbing the mountain. And we're going to start working back towards this Big Daddy, which is just 5,100. Just under 5,100. 50.90 to 5,100. That's way down here. Well, then what's down there? Shit, there's a gap down there. How come the models have spikes and clusters where we got gravity points and we got gaps? Well, here's the secret of the market. Every indicator, every level, every pivot point, every inflection point, every fractal, every harmonic zone, everything is on price, volume, and time. Those three. Those are your three variables. So if you're a new trader, non-ITG trader, I would tell you to get really, really good at reading price action or reading volume, and then how does time apply to it. ITG members know time's been my baby. Time's been my baby for a long time. I trade time, and time allows me to set up gates for the market, i.e., here's a gate. In the event that, let me see if I can find one. Got one here. In the event that we open the market on a Monday, it's got to be a Monday, not a Tuesday. If it's Tuesday, it changes the guidelines. If we open the market on a Monday in between the box, supply-demand zone, and then we close above it on a Monday, and Tuesday, we spend the whole day above the weekly supply level. This time, and only this time, I can roll my PVI puts up to weekly S2. So for this week, I could roll 47.72, cover them, close them out, and then resell weekly S2, which is right here. So 49.12. So I went from 47.72 to 49.12. Why? Because I know time and price gave me what I require to become more aggressive with my puts that we're not going to come back down below weekly S2. It's a system. Here, we opened Monday in the box. We closed above it. We spent all day, even though Tuesday was a doji. We spent all day above it. I could roll my 49.68s up to weekly R2 or S2. I go 49.68 to 50.84. I just sold 100 points higher on SPX. Now, I know how to hedge. I know this system. I built the damn system. It's my baby. I know it. So I have guidelines. They're not hard, fast rules. Moving forward, I'm on vacation. We're in Cozumel here. The market opens above the weekly supply demand zone, and we close above weekly supply. But we hit a low of day in power hour. So I didn't consider this a green candle closing up here and all day Tuesday. Again, I was on vacation. Newer members rolled up to weekly S2 and they got run over. Last week, did we touch the box? Not at all. Why would you roll your puts if we hadn't touched the box? What are the probabilities we're going to come back and retouch the box? 99.97%. Why do I want to sell a put credit spread here when I know damn good and well we're going to come back to 52.20? If we don't come back to 52.20, okay, it'll be the fifth time since 2000. In 24 years, it'll be the fifth time. And it'll be the second time this year. But don't be aggressive unless there's a reason to be aggressive. Don't be aggressive until you know how to handle yourself when we break. Now, the other line is here. The yellow line is the PWG level. It's one of our 4. We have 3 standalone algorithms. Auto, well, let's start here. 3 algorithms. PWG algorithm that I post on the spreadsheet, that's our volatility algorithm. Okay? And it talks about current volatility, implied volatility versus historical volatility, certain ratios. But it just gives us a level. That's the yellow line. Underneath there, we have weekly R3, and underneath there, we have weekly S3, and then the box. Green and red are just buy trigger, sell triggers. But it gives you an idea how many times we fail. The market stops. SPX stopped at weekly R3 here. We ran through weekly R3 here. We didn't make it to weekly R3 here. We stopped at R2 here. We stopped at R2 here. Didn't make it to R3. Didn't make it to R3. Didn't make it to R3. Made it to S3 and closed above it at S2. Didn't make it to S2 or R3 this week. That was a boring ass week. Okay? And so when you start to understand, wow, I need to know if whatever instrument I'm trading, does it honor the weekly S2 R2 levels? Does it honor the S3 R3 levels? Does it honor the PWG levels? Okay? ES does and doesn't. I mean, it really, SPX does and doesn't. Let me see if I can find this chart real quick. That's not the one I wanted. Sorry I didn't have them up. Here's my other problem. I got an issue where all right, I got to go find them on my my computer. They're not on my Discord. All I'm going to show you is I'm going to show you the PWG stats. That's the yellow lines, guys. That's the yellow lines. So, not PVI lines, the PWG stuff inside them. Breach a conservative low, going all the way back to the 70s. Okay? Don't worry about the 70s. Let's go from 2000. Let's go for almost a quarter of a century. 86% that we do not breach the conservative low. So, 13.3% of the time, we're going to breach it. But only of the 13% we breach it, it only closes below it, what, 6.9%? We only close above it, the conservative high, what, 6.3%? Less than a 7%. Here's the beauty. These PWG levels, they change every week because that's the proprietary algorithms and stuff that we use. Here's the beauty. You try to go and sell a 7 delta call and a 7 delta put every week, and I will bet you $1,000. I'll bet you $100,000. I'll double, my investment will double yours. My returns will double yours. The reason why, that's why I don't do fixed deltas. People are like, oh, what delta is it? Hell if I know. What's cross between an elephant and a rhino? Hell if I know. I don't care what delta it is. I don't track the delta. because the deltas don't matter to me. The levels, these levels matter. Back testing matters. Statistics matter. So when you look at it, we're sitting there, if you look in the last 4 years, because currently, and again, this is as the end of March, we run it quarterly, but at the last 4 years are important because we now have 0DTE that's kicked on. And with 0DTE, we have a muted volatility index, a VIX concept. VIX futures haven't changed, but the VIX has changed. Why? Because the VIX is 30-day hedges, not 1, 2, 3, 5-day hedges. And so with it, but even though you're like, okay, the 0DTE phenomenon has changed the way options, well, no hell it hadn't. Since 1977, it was 93.7 that we stayed above the conservative low. 93.4, 93.0, 93.0, 93.1. It ain't changed. Do we go through a rough patch? Yeah, and then we go through this 3-month extension. PVI hadn't breached yet this year. Closing breach. This is the longest time since we started doing weeklies. Definitely since 2020, but I think this is the longest win streak we have where no closing breaches of PVI. I think it's all the way since 2018. But I know it's since June of 2020, 100%. So again, statistics kind of give us the confidence to look at this puppy. So if you waited and you sold the yellow line, here you got in trouble. Here you clinched. Here, 3 weeks in a row, shit, you got a new Buns of Steel ass workout and you're going to be a multimillionaire. Here, you got breached. So what's happened? When we see volatility start to expand, this is when the volatility models get challenged. And it's a good thing. Again, PVI is not designed to win. It is not. It's designed to give us a very competitive premium to trade where we have a 97% chance we're going to make money and not have to do anything. Last week, it was insane. Last week, the puts were going, the PVI puts were going for, $9. The week before, my dumbass, I traded inside PVI. I thought I was, and again, I did it. Some members followed me and got hurt, and I apologize to them. I hate the fact knowing that people are following my trades without the expertise and the know-how to hedge it. But the one that I sold the previous week was 53.90s, and at one point I sold them for $4.20. Guys, they went to over $26. You make $26 on one trade. Now, with PVI, how's it set up for all the newer members? Bottom line is this. Guys, when you're trading, when you're selling premium in the theta world, actually not selling, when you're trading options, you want to buy tight and you want to sell wide. What does that mean? Well, if I'm buying a debit spread tonight, and I told some guys already, if you're sitting there on NQ, weekly demand is at 430. The top of the harmonic zone is 450. Weekly sell trigger, we're more than likely going to make an attempt to hit 18,600 at some point this week, unless all hell breaks loose in the Middle East. And then it's just going to be a straight run and we might see capitulation. You got to keep your eye on the bonds. But we are looking for the market to move back up here. So we trade debit spreads in the favor. In the event that Sunday night ES opens up and it stays right here for like 4 candles, 5 candles, we stay in between weekly buy sell trigger and ES doesn't move at all, we try to buy a 5 wide debit spread here and a 5 wide debit spread here for Friday. And people are like, why? Well, if you buy a 5 wide here and you pay $125 for a 5 wide, guys, do not ever pay more than $125 for a 5 wide if you can help it. Why? The return is, your risk reward ratio is perfect at $125 for a 5 wide debit spread. So in the event that we know we're going to close above here or below here, if I can get a 5 wide here for a $1.25, and I can get a 5 wide here for a $1.25, I got $250 invested in that trade. This is the passive hedge. If I got a $250 invested and we close above it, I make $5. I double my money. I took a loss on this one, but I doubled my money. Net, right? $250 in, and I get paid $5. That's a 100% return. And so when you look at it, you're like, well, why would I do that? Well, let's go back and let's look at the levels. You made money, 100% trade, 100% trade, 100% trade, 100% trade, 100% trade, 0, you lost it. 100% trade, 100% trade, 100% trade, 100% trade, 0, you lost it. If you didn't take profit at all, 100% trade, 100% trade, 100% trade, close one, 100% trade. Guys, we don't close inside the box often. So y'all feel me? Now, can you get a 5 wide for $1.25 every night? No. And you dang sure aren't going to get it with NQ gapping down below weekly demand. Now, I am highly expecting, and everyone in ITGS, that we're going to come back up to this level. Why? Statistics. Statistics of us trading there. I've posted them in Twitter. I've posted them on Reddit. I might find the stats and post them here. There. Here's the stats. Touch weekly supply. Touch weekly demand. Touch either 99.92%. And one of our contributors ran these for us. 99.92% we touch one side or the other. So if we gap down below it and everybody's shorting for the week, the easy money might be just putting on a 5 wide call debit spread back up to weekly demand. Or if you want to trade options and hold options. If you wanted to trade options and we're making new lows, let's see how low we gone here. 222, harmonic size is 75. 75 times 3 is what? 225? Is that right? Quick math. Bama boy. Yeah. 225, and look how low we went. 222. 3 full harmonic rotations. And then what happened when we got down there? This prevents you from shortening the hole. We've already had 3 harmonic rotations lower. So then I want to flip it, and I want to okay, what's going to happen here? What's 75 points off the lows? Oh, I got to go Z, don't I? Or control. Oh, 75 points off the low. So if you knew we had knocked out 3 harmonic rotations to the downside, sorry, this isn't SPX roadmap, but if you knew that and you said, you know what, I'm going to take a shot. Now, and we bounced 76 points to the upside, well, the long rotation side is only 65. So we go to 65. And what do you do here? You better take some damn profit off the table. Why? That's one rotation. So what do? Take profit on a contract and then tighten up your stops. Right? Does that make sense? That's just trading 101, guys. It's just, again, statistically, we had 3 full rotations down. Earlier, we had 2 down and we bounced. I don't even know if we made it a full rotation, though. 215 up to 283. So, yeah, almost 65 points. 215 to 283. And again, if you knew that was a full rotation and we're right at the bottom of a harmonic zone and you didn't take profit or tighten up your stops and we came back down and you got below your entry and you lost money, good. Learn the fucking lesson. Learn it. You don't go broke if you take profit. Do you hit home runs? No. But my God, if you hit enough base hits, you're going to be profitable in this game. But if you get greedy and you want to get long here for us to go back up there, next thing you know, you get stopped out and you're out. Now the market moves back up and you didn't, and you're all depressed on Monday because you screwed up. Good. Learn the damn lesson. It's a hard lesson, but you got to learn it. If you're not in a Discord or a group, a trading group where you guys got accountability, you just open the door for disaster. Right? FinTwit is all about people trading profits. Guys, the other day I was down so big in PVI trading it wasn't funny. When I sold the 5390s, which was the PWG level. I sold these. Where's my level? I sold these 5390s. These 5390s. And it was clinch fest city. And I was hedging my ass off. I was net short anyways. Because the one thing I did tell everybody is as soon as we break weekly demand, we're going to flush. You better hedge. So I made a lot of money and I took them off at weekly R3, S3. And then we came down and then we moved back higher. And I'm like, oh Lord. Then the next day and I'm like, oh my God, we're 20. These were trading for $26. And then boom, we blitzed all the way up here. And then we came all the way back down. Clinch Fest City. And again, it was a lesson, right? My systems, we opened above it, we closed, and I'm like, I'm not going to roll them, but I'm going to go ahead and sell them when we open because I thought we would open and we come down and we touch Friday's low. Again, I made the right call, right technical analysis, the right read, but the market don't give a damn about me or you or anybody else. Market don't care about PVI. PVI is just smart enough to keep its ass out of the fray the majority of times. So this is where we are this week. We are at a spot. Are we going to close this gap above us? Maybe 54.15-ish. Are we going to come down? Are we going to hold 52.65? ES is down 67 points. So we're at 53. Let's go 70 points off of that. We're at 53.75 right now. It's 53.74. So we're right in here. 53.74. We're still above where we were Friday's lows for SPX. We're not even at Friday's lows for SPX. We've got these two big fib levels that are important. Again, the aqua one from way back when, last October. The gray one is from the April lows. I would expect us to get down, test the demand zone, go from the halfback to the 618 from April lows, and then get a bounce. If we close below 52.64, we're in trouble. I'm just going to tell you right now, hedge fund guys I know, they're already trading towards it, for it. If we go below that, I think we run through this demand zone, and then we're going to get back up to having to look at that box. And you start getting into the 5150s. That's well below the demand zone, and it can come off quick. 100 points. So what do you do? In the event that you're trading, find your weekly supply and demand zone. We don't have them for SPX until tomorrow morning. The reason why, because of gaps, it screws up all the algorithms. So we run them at the opening bell for SPX. We have them for ES right now. But anyways, if we do fail it and we go below weekly demand, we go through the same process. Let's put on a put debit spread at weekly S2. If we hit weekly R3 on Monday or Tuesday, we probably want to take the profits off the put debit spread and see if the market bounces. The market often bounces on Wednesday. So I would expect, as I told the guys Friday, I'd expect us to sell off over the weekend, especially if there's any offensive move from Iran towards Israel. I would expect us to dip on Monday, and then we're going to see if buyers step in. The internals, advanced decline ratio, advanced decline volume, and the ARMS trend index, or kind of what we look at for internals. How are they going to hold up? We know what our PWG levels, our PVI level. Do I got them all? Yeah, I got them all here. So we know PWG level is probably going to get breached again this week, at least early to the downside. Concerning is that if people do run it, the 200-day moving average is going to be below PVI this week. And so this becomes a pretty ominous level for us to get down to 5,000, 5,020. It'll be higher by the time we get down there. I don't think we're going that low, but again, anything can happen. Worst case scenario, you always got to play the if then. Worst case scenario, in the event it's a multi-pronged attack with Hezbollah, Houthi rebels out of Yemen, Syria involved, and Iran. If it's all of the above, I would not be surprised to see Wednesday if China starts toying around with Taiwan again, like they did when Russia invaded Ukraine. In the event that happens, man, it can spook the markets. We still have the carry trade starting to potentially unwind. Again, the odds went from no July cut to September cut, which we knew, but now it's September cut 50 basis points, not 25. Again, we'll see. No one expected. Again, it's the government's bullshit way of adjusting previous data points and correcting them to show that, well, now unemployment went from 3.9 to 4.3 because they had to revise all the numbers. Well, they revised them because they're not truthful with us. And again, it's not party specific. The government just does that. Why they need to revise data is it's garbage, man. Get the data, solve the data, fix the data, report the data, and don't revise it. I mean, it's just the revisions are what kill you because that screws up all your models from a macro level. So now we're dealing with super high unemployment. Inflation's high. Crude should still continue down, but in the event that the Middle East spikes up, we might see crude run again. And with bonds running, our interest rates right now on housing and the 2-year, we're back the lowest they've been since February. And we're getting ready to put in the low for 2024. From an interest rate standpoint, you just got to make sure that bonds don't run so hard that it becomes a capitulation in equities. So that's it. Guys, if you got any questions for me, go to my Twitter and DM me or tag me on Twitter or go to our Reddit. I don't answer any ITG YouTube comments. I don't even go to ITG YouTube. I pull up my dashboard and I stream. I'm going to kill it. We're going to come back in about 15 minutes and I'm going to come back and we're going to go through this whole process. Oh, let me do one thing. I got to pull up one thing that I do want to show everybody. This is our momentum indicator. We don't need the trend because it's daily. But here's our momentum indicator. There's no overbought. We had been overbought on a weekly since the last end of May. Again, a market goes overbought. The dots are weekly. The blue and white line are daily. It's a system that I built way back in the day. But you can see here we were oversold on the weekly, and the daily came down into an oversold condition as well. And that was the 2nd of May, and that was our last macro long signal. Anytime you get oversold on the daily and the weekly, and the market crosses back up to correct the oversold on the daily, that's a good long. So in the event that you were here in the market, long from 50,044, 5,044, that was a hell of a run. Here we were overbought on the daily and the weekly, and the market corrected back. And what happened? We spiked higher for 2 days. That's all those folks shorted. They got stopped out, and guess what? The market proved them to be right. They just were early. The other thing that I show with everybody in ITG and everywhere else, in the event that you look at the market and you want to learn to trade I'm going to see if I can do this. You notice the difference between, this is what we call a round top, right? We got up here, we stayed there for a week, we stayed there, and then we came down. This is a vertical bottom. Round tops and round bottoms get tapped, right? We come right back to them. When you get a vertical down and back up, it's sharp. We're usually going to go and break the previous swing high or swing low. And when we do that, we have a break of structure. We have a valid demand zone. Here we came back down. Violent, we move back up. Somewhat smooth here. And where are we? Right back to it. This is a super sharp one. If we don't come back up here quickly, this is it. And I've told everybody I would not be surprised. This all-time high should hold through June of 2025. So if you're carpet bagging, bag holding, a bunch of longs, SPX longs, waiting for us to get to 5680 or 5700 or 6000, if we don't get there quick, and we need to turn around quick, if we don't get there quick, this is gone, and this is going to be a major top. ITG guys know what I'm talking about, but major top is 3 to 6 months. That top does not get retested. It's going to turn out to a 12 to 18 month top in the market, and we won't go back to it. Again, round tops and round bottoms get tapped. Vertical ones do not. They tend to hold for a while. Is this going to be a vertical one or not? Don't know. Don't know. If you're an Elliott wave person and you're counting, are you 1, 2, 3, 4, 5? Are you 1, 2, and this is wave 3, and then wave 4, and then wave 5 back down here? Don't know. So that's all I got, guys. I'm going to kill stream. Join our Reddit group, our subreddit group, Indie Traders Guild, and communicate there. That's the easiest way for us to do this stuff. It's free alpha. We're not asking you to join our Discord. You don't need to. My biggest thing for everybody is get in our community, get active, ask questions, and learn, and make money. Make you some money. And then when you make money, maybe invest in your future to learn a little bit more stuff, because we go pretty hard in ITG. But don't just join expecting it to be easy. If you're confused in subreddit, and it's not clear, and you got a lot of questions, why not ask it when it's free and you got time to learn, instead of you paying for a membership and feel like you got to go too fast. You know, the whole job here is to earn a little bit of money while you're learning how to trade, while you're learning market structure, you're learning some of these stuff. ITG is not me. I'm one of many contributors, a dozen, and everybody runs their own stuff. In trading, you got to find your fit. What works for you? What instrument? What time frame? What type of trader are you going to be? A delta trader, an option trader, a futures trader, a theta trader? Are you going to sell put credit spreads? Are you going to sell call credit spreads? Are you going to sell iron flies? Are you going out 30 days, 45 days, 90 days, 230 days? You got to decide all that. What works for your lifestyle? What works for your mannerisms and your behavior? That's your find your fit. Do you trade a tick chart, a 1 minute chart, a 2 minute chart, a 5 minute chart? Are you longer term looking at 1 hour charts, 4 hour charts, daily charts, weekly charts? Or, do you understand market structure? One time framing up, one time framing down? Do you understand, supply, demand? Do you understand how to support, support and resistance, how to find them, how to see it? Volume profile, gamma, EMAs, RSI, MACD, stochastics, embedded, non-embedded, CCI. There's just so much out there, guys. And I'll tell you, if you're new and you're struggling, or if you've been around and you've hit a wall, changing up your instrument is probably the better way to do it than to change up your time frame and your perspective. The more you transition and shuffle through indicators and time frames, the worse you're going to be. And so at the end of the day, 8 months later, 18 months later, 36 months later, you're going to have a shit ton of experience and you're going to be broke. And you're going to know all the things that don't work and why they don't work. And you would never have found the one thing that you can do. Guys, if you can go through the market and find over the next 3 months what your A++ trades are, you will become one of the most profitable traders for your given potential and your given portfolio size than you could ever ask for. But you got to find your fit, what works for you, and then you got to have the fortitude and the courage and the discipline to fucking turn off all the other noise and stop chasing all the other lotto trades and all the Wall Street bet trades and all the home run ER trades, trading earnings and all this stuff. When you find out that, man, trading the weekly supply and demand level is my A++ and I got a 97%, why on earth would you start to migrate out, venture out and try and trade 5 or 6 different strategies? Hone in your A++ and size up on your A++. And then when you got a little discretionary money, then start to venture out and explore new things. All right, guys, we are selling off. We're at 18,115 on NQ. So I got to take a little bit of break before we do NVIDIA because we now are probably at 300 points lower would be 4 full rotations. And that's going to come in right about 1890. So we're probably going to go 1890, bounce back to 18,110, 18,120. If it fails this mid right here at 103. All right, guys, that's all I got. Peace out. Guys, God bless you this week. Have a good week. Be profitable. Ask questions.